Joining us for our weekly market wrap-up is Mark Wenzel from the Hopkins Group. Good morning, Mark.
Michael, how are you?
Good, thanks, mate. Now, the reporting season kicked off this week and there's been some pretty impressive, strong results. Who have been the top performers?
Yeah, indeed, Michael. So we had early in the reporting season with Transurban reporting a jump in earnings as traffic rebounded after the pandemic, and inflation increases for the tolls assisted the earnings as well. Traffic on Sydney Road tolls reached record highs with the opening of new roads, including West Connects. Melbourne and North American traffic flows are still recovering from COVID lockdowns, but are getting close to back to record levels. Transurban confirmed they'd be interested in bidding for Melbourne's Eastlink after the current owners hired bankers to sell their combined stake. The building materials company Boral rose 12.5% yesterday as investors saw progress in the business refocusing its efforts to maximising its profit in Australia rather than pursuing North American business. They sold their fly ash business for $4 billion last year and are moving to refocus the Boral business back in Australia, with the Stokes family of Channel 7 fame sort of driving that position. The turnaround could take 5 years, and cost pressures as were evident, as we all know, with the energy costs up 54%, cartage rose 20%, and repairs and maintenance up 12%. So all significantly higher than inflation. And if they pass those costs on to consumers, it's going to further add to the inflationary pressure. And they also highlighted a shortage of drivers in terms of getting people to drive their materials around. The other company reported yesterday was Suncorp, who confirmed something we all knew, that insurance premiums for car and home insurance have risen significantly, which drove a first half rise in profits for the insurer. Earnings for brands such as AAMI and Apia doubled, which was assisted by the release of $150 million of COVID provisioning, that did not eventuate. The premium rises for home insurance are up 10.7%, which was the biggest annual increase since the Brisbane floods in 2013. And then obviously with the floods from last year, you'd expect those home insurance premiums to go up again next year. And car insurance rose 8.9%. Suncorp is selling its banking business to ANZ later this year.
Yeah. Now, Mark, I saw some reporting around car insurance rates going up, that there's been a bit of a step towards third party only. People are dropping off with the cost of living pressures that they're feeling. How long before they bite themselves in their own arse, putting their premiums up and see a drop?
Yeah, well, that's always an issue, I suppose, for insurers. So, again, they just exactly they just keep putting prices up. They've got to cover the cost of the events that they're insuring. So, it'll be interesting to see how people do cut back on their spending.
Now, last week you gave us a great 5-point dictum why the Reserve Bank is wrong. There seems to be a lot of people agreeing with you that this lever isn't the one they should be pulling. And now we've got a lot of pundits saying we're at a 50-50 where we could be heading to a recession. That your feeling as well?
Look, it's always difficult to sort of predict a recession, I guess, with employment so strong. But there's certainly the Reserve Bank rose rates last week 0.25% again, up to 3.35%, and it's definitely going to be having an impact. And look, as we've talked about, potentially waiting to see what sort of impact the raises they've done so far would be valuable. But they're hell bent on increasing the interest rates to tame the inflation beast. So let's just see whether it's going to work or not.
And I think they've learnt their lesson. They're not being shy, where they made the mistake of saying nothing until 2024, and now they're saying that this could last until 2025. So they've swung the other direction from that. Let's downplay it to. Do you think they're just making sure, or is it a genuine belief that 2025 is where we'll be before we see any real relief?
Yeah, look, jawboning's a tactic for them. Again, if they can set the expectation that interest rates are going to rise higher and higher, that'll force people to cut back or encourage people to cut back on spending now, so they may not have to raise as much in the future. And that was the same, I suppose, with the saying that the rates are going to stay low till 2024. It encouraged people to go out and borrow money and spend, and obviously we're starting to see the inflationary impacts of that. So, the jawboning, is what they described the term, and signalling is a really important feature of Reserve Bank, managing the economy. It's possible that they won't have to raise rates, but I mean, there's just inflation everywhere, as we just talked about there. Building materials, insurance, the Transurban, everything's going up. So it's really just a question of whether people stop spending, and as you described there, whether the interest rates are the right way to bring the inflation down. Perhaps the government showing a bit more restraint around its spending as well would also assist in reducing inflation.
I've found a great way to cut back on spending, Mark. It's be someone like me with no money, so there's no option.
It's a good way to be, Pat, sometimes, as long as you're happy.
Yeah. All right, Mark, we'll leave it there and we'll chime back in next week for the further reporting season outcomes.
Terrific. Thanks, Michael.